This is Eric Parker with Cross-Border Real Estate Solutions. I wanted to create this platform so that local investors in Windsor-Essex County can share their experience with everyone to make real estate investment more accessible for everyone. And that's the same reasons that I created Cross-Border Real Estate Solutions to make investing in the US accessible for Canadians. Just as the insights Kwame shared with us today, as well as what we know about cross-border real estate solutions, comes down to education. And these things can be a lot more accessible if you're within the right crowds and networking with the right people. So that's exactly what we're trying to bring to the public and how we can help you. Good morning. Welcome to the beautiful Seven Lakes Golf Club. Not the best day for it, but excited to be here. It's always a good time when you get out golfing. So really excited to be here with Kwame Afrani of Afrani Properties, and we're going to make him a little uncomfortable today. It's his first time ever golfing.
Very first time, guys. Very first time. So excuse my swing.
So far he's been crushing it, but yeah, we're going to have some fun, play some golf, talk real estate. My name's Eric Parker. I'm with Cross-Border Real Estate Solutions. We help investors, Canadian investors, invest in U.S. real estate.
And I'm Kwame Afrani with Afrani Properties and GH Building Designers here in Ontario.
So we're going to talk real estate, we're going to learn. Kwame is a very experienced investor, really excited to see what he has to teach us, so we're going to have some fun.
Let's have some fun, guys.
All right, here we are at the first tee, moment of truth.
Moment of truth.
So we're going to play scramble format today. It'd be a little bit too mean, I think, to put Kwame through the ringer.
Appreciate it, Parker.
Yeah, we're going to have some fun. Here we go. So, Kwame, Afrani Properties, GH Building Designers.
Yeah.
You're an ambitious guy.
Yeah. You gotta try things out, see how it goes, and if it works out, you stick with it, right?
Yeah. True. So, talking about Afrani Properties for the next little bit, because that's like more your real estate investment venture. Tell us a little bit about that business. What's your focus? What's your specialty?
Yeah. So for Afrani Properties, it basically started out as I got the idea when I was in university. Yeah. Pretty much first time renting. Rent went up. I was like, oh, that's interesting because never rented before. And I was like, what's the business model behind this? So at the time, didn't know too much about real estate. So looked at houses for sale on the street, looked at the price, looked at the rent we were paying at our place. I was like, oh, wow. There's a lot of margin on this, and that's where the idea was birthed. But obviously at that point in time, broke student, not working, couldn't do much with it, so couldn't really push that forward. So pretty much the idea came into fruition when I graduated. A year after I graduated, I was working. Everything was pretty monotonous. Go to work, come home, watch Netflix, play video games, nothing productive, and I wanted to get into something. And it's one of the ventures that came back to mind. But what really drove that idea was as I was in school, I noticed a lot of, it's student housing, right? Yeah. So I noticed
that's your specialty.
That's my specialty, or one of my specialties.
Okay.
Student housing has been pretty much neglected for most of the part of it.
Yeah, especially in Windsor.
Especially in Windsor. So, but luckily for my time during university, I was fortunate to kind of stay in a nicer home. And anytime we would search outside, we'll always come back. So pretty much the goal of what I was trying to do was trying to give students a comfortable space for them to live in. Yeah. While also making them make business sense, so not being your typical slumlord. Yeah,
that's great. Windsor needs more of that.
Yeah, and there's a good market for it, and
nice. Yeah. So nicer spaces, student housing.
Yeah, nicer spaces.
That's kind of your specialty,
basically.
And what's like how many properties have you done now?
So for student housing, I've done roughly about 4 of them. Okay. To date since I began.
Nice, and that was 2019, right?
Since 2019, yeah.
Nice.
Yeah.
Cool. And then a couple other projects too, right? I know you did a full build.
Yeah. So the full build was with the design company, but so it's kind of been a mix. So started out with student rentals. Obviously, interest rates dropped, prices went higher up. So then I had to pivot to a new strategy. So
Interesting.
the strategy that I kind of started going with was conversions. So basically taking single family homes, converting the basement, making it a duplex kind of
Got it.
situation.
Nice.
And also having the potential to have like a garden suite in the back in the future.
Okay.
So it's kind of been a mix of those. So
And that can take advantage of, like in Windsor, I know it's 3 properties or 3 kind of separate dwellings, I guess, per.
yeah. So right now the city allows like three dwellings
Yeah.
in the main house, or you could do 2 in the main and 1 detached.
An accessory.
Yeah, accessory.
Okay, gotcha.
Yeah. So
Nice.
Yeah.
That's good. And what's the future of Afrani Properties and GH?
So pretty much for Afrani Properties, it's pretty much going on that same mantra or vision that we had, where it's like we're trying to provide quality housing to people, not cutting corners, like
Awesome.
a place where you yourself, I myself would be comfortable
Awesome.
staying.
That's
At
good.
one point I used to joke that my tenants live in a nicer place than I do. So kind of pushing that mantra. So delving into that, getting into developments and stuff, because some of the strategies, even with student housing, has been like building on extensions onto homes that are smaller.
Yeah,
right?
and that's your latest project, I
That's
think.
and that's the second time I've actually done it.
Okay,
So
very nice.
right now I've kind of figured out a model where financially it kind of makes sense.
Yeah.
And that's kind of the direction we're going, and delving into kind of trying to capitalize on the new bills that are allowing more
100%
units
more
too, right?
density. Yeah, agreed. That makes sense. Smart. Okay, not on the golf course anymore.
Yeah.
So first time golfing, what do you think?
It actually wasn't bad. Like I thought I would hit the ball, but hitting the ball actually felt pretty good.
Yeah, you got about 2 swings in there.
Two
right?
swings.
But yeah, rain day, so have to take a rain check on the tee time. But anyways, we're still going to be talking real estate.
Yeah. I recommend the driver.
Kwame's just a beast. That's what it is.
Yeah.
Okay, Kwame. So we talked about your portfolio, the progress you've made since 2019, and thinking back through your progress, what was that first moment where you went from kind of the planning stage to taking the first real action? Like, this is real now.
Yeah, so pretty much, so for me, like how I've kind of gone about things in general in life has been like, if it generally makes sense, I jump into it. So I know there's some people who get stuck in the planning phase, want to know every single step. More of high level, high picture. Okay, does this make sense? Yes, no, maybe so.
Yeah.
And then jump into it. So pretty much for me, it was more of, so as I mentioned earlier, had the idea from before. It resurfaced back when obviously I was in a better financial position to kind of take that on. And just double check and see, hey, is student rental still a thing in the university area? It was. What are the prices saying? Is it feasible? Okay, it was. And does the rent relatively cover it? And at the time, what kind of gave me that confidence was also doing some personal research. So kind of like there were a couple of YouTubers that were like providing pretty much education on real estate investing for free online. So they'll visit people's properties, they'll talk about different investing strategies. And the one thing I took from it was like, pick a strategy. When you're starting, pick one strategy, stick with it. And then later on, if you want to delve into different facets, you do it. So I zeroed in on it and just said, hey, numbers work, it makes sense. Worst case, my exit is to sell. So
Got it. So you said, a little bit of education, and you're the kind of person that says, by and large, if it makes sense, then take action.
Yeah, pretty much. Because then one of the things that holds people back is over planning. Like, obviously, don't jump into something that like you don't have an idea about, but like have a little. All you need is a little bit. If it makes sense, you do it. But everyone has different tolerances. My tolerance is more of little information, makes sense, go. Others plan longer, but the issue with planning longer is you get stuck in this thing they call analysis paralysis, where it's like your next step would never happen because you're always predetermining what's going to happen.
For sure. Yeah, I mean, a couple of things I've heard over time. First is like, planning is a form of procrastination at some point, right? Even watching videos, educating yourself, it can be more entertainment than action. And most of what you actually learn happens once you're in it.
Exactly. And that's the other thing too. It's like they say experience is the best teacher. And for me personally, going through school and stuff, like I did better when there was more of a practical aspect to stuff than the more, let's say, reading and stuff like that, because then it's like I learn more by going through the process. It's like you get to know, okay, maybe if I tweak it this way it works, as opposed to, okay, the book said it should be this way. So
yeah, and personally I think I remember more when like you've felt it, you've lived it, you know what I mean?
Exactly.
Even if you know on paper what's supposed to happen. Another thing I've heard too is everyone talks about like, well, there's 10 steps to maybe pull something off. And a lot of times everyone wants to solve steps 1 through 10 all the time. Yeah. But realistically, you don't have to worry about step 10 till 2 years from now. And you'll know a lot more and you'll have a much better network at that time. And so take one step forward today. Don't need to know what happens at the end of the trail necessarily.
Exactly.
Cool, that's good. So kind of along those lines, what advice would you have for beginners getting started or those who want to get into it?
So for those who want to kind of get into investing, the one thing that I'd advise them is basically have focus, like concentrate on a particular strategy you're going to focus on. So there's so many times where people get stuck in this like shiny object syndrome. Like it's like, oh, I'm going to do this, I'm going to do that, and it's like you're just dabbling all over. But like that lack of focus just takes you off your path, and you won't be able to move forward, right? So the thing I always tell everyone is have focus, pick a strategy and go with it. And the other thing too is like pick a strategy that works personally for you. The fact that maybe I'm doing student rentals or I'm doing single family or multifamily or whatever doesn't mean that it's good for you, right? Like you have to evaluate the different strategies and see what works best for you. For example, like for me, when I was going to student rentals, people are like, they're going to ruin your house, they're going to do this, they're going to do that. But it's like, I felt comfortable with the strategy. I knew how I was going to approach it for it to be comfortable for me. And that's how it works. So the fact that it's working for me doesn't mean it will work for someone else, right?
Yeah, for sure.
So those two things, focus and pick something that's more applicable to your nature, pretty much.
That makes sense. And I know a lot of people tend to get caught up on the risk factors, right? Like whenever you're telling people you plan on doing something, you know, almost everyone has something negative to say about, you know, hey, this risk is there, that risk is there. Now, like that can be scary, but at the same time, I feel like airing out a lot of the risks is like the first step toward like acknowledging them, like, yes, I know this is real, and then you can think through solutions for that too.
Exactly. Yeah, and then and it's key for that, because once those risks, if you're not focused on a path, or you're just doing it because someone else is doing it, you won't be able to think through the possible solutions for the risk, right? So like for example, when I started, before like. First of all, why are you buying a house? Like it's a bad investment. Second of all, the price range you're looking at, forget about it. Like all sorts of stuff to kind of throw you off. But because I was one with the idea, it was like, okay, I hear what you're saying, but I'm still gonna try it out and see how it is. I'm acknowledging that these are the risks associated with it, but I really believe in this idea. Like there are tons of people who've come up with ideas that got shot in the beginning, but
definitely
they're doing good things now, right? So
for sure, everything's solvable, and like you know, whenever you get a no, ask why, and then trace it to the solution.
Exactly.
Yeah, it makes sense.
Yeah.
So I know one of the hardest things for me personally was building the team. So I mean realtors, I mean contractors, I mean you know, everything you need to get going kind of thing. Especially because, you know, I do cross-border, so you know, it's not like I had a great network when I was looking in certain communities. It was, you know, I picked a community because on paper it made sense, and wanted to explore kind of the intricacies of that community. So you, on the other hand, too, obviously work with a lot of different people for like contractors and such. So what's some advice or some things that have worked for you in terms of building your team?
Yeah, so pretty much like one thing to understand is when you get into real estate is that you're going to go through a lot of people. Like the people that I started with, maybe only a handful are left, and you have to treat this like a business. Like it's not you have to be decisive. Someone doesn't do something the way you want it, drop them. Like there's no emotional component to it, because at the end of the day, the longer a project takes, the more money you're paying for it. Your carrying cost carries over. So pretty much when I started out, and I think I left this out in the beginning, I reached out to the landlord who rented to us back when we were in university. I'm like, hey, I'm gonna do this. Is this a good idea? It's like, yeah. I was like, okay. I started at your age. I was like, oh, okay, cool, sure. So like, that's one of the first positive feedbacks I got from out of all the people that I spoke to, right? And through him, it was like I was able to tap into the people he was using, and his people knew other people, and then it's pretty much been like a word of mouth kind of thing. And word of mouth is a good filter, but then like you filter further by the quality of work that's done, timelines. I'm pretty big on timelines, so timelines are also important. So kind of through that's how I've kind of filtered through to kind of get my team. And then luckily starting the permit design business has also exposed me to different types of contractors, which I've slowly incorporated into my own team. So it's kind of in flux, but at every point of time there's going to be a main character who's there, and once you get a main character that's a rock star for you, you keep them, and they probably know other rock stars that they bring on. Yeah,
makes sense. So like a little bit of trial and error, but like high expectations consistently.
Yeah.
And
sometimes too, like there are moments where you can there's some understanding as to why maybe something didn't go a particular way, but then like if someone is just not showing up to site, there's no need in hanging them around. Even if it's mid-project, swap them out. There was a project I was doing, like my very first extension project. The HVAC guy just disappeared on me 2 days before the job, and like 3 weeks later he comes back and he's like, he wants to get in. No, I've already moved on. I've brought someone on. So having that decisive factor, because you have to remember that you are the leader, you're the CEO of the business. Like it's not just a house you're getting, you're running a business. So you have to make decisive decisions for the business. Yeah.
Yeah, makes sense. And I know you specifically have had a lot of experience with contractors, like both full builds, a couple extensions, a lot of different skill sets I'm sure you're managing there.
With that, like pretty much like when people are starting out, one of the things you can kind of get into is, let's say you don't know anyone who can refer you a contractor. If you're going out in the market, popular saying 3 quotes. Get 3 quotes, compare, see what's going on. Like, I mean, if like there are outliers, I mean, the popular thing which normally happens is you go with the lowest quote, but that lowest quote doesn't always mean best quality, right? Like you have to factor in, are you able to talk to your contractor?
Yeah.
Like, can you relay your crazy ideas to him, and does he receive it well and give you feedback? You don't just want someone who's just like, okay, that's what it is, I'm doing it. You want someone who also gives back ideas, right? Because it's a creative process as much as it's construction. It's a creative process, and your idea may not be fully baked, but the contractor is the oven that makes it gets it baked. So having that interaction is important. So it could be you're going for the middle guy or going for the top guy, but the lowest code is not always the best.
I definitely understand what you're saying. I feel like with contractors, a lot of it is personality matching. You know, like if I like to look at specialists for certain things and have like a number of like more specialists as opposed to one generalist, because I just think that they they know their space better. But when you're going through that coding process, you know, it's not always the lowest. Maybe you match personality better with someone. Like you said, you can bounce ideas off them. Something I always say is like, you know, tell me if what I'm saying is stupid, like, you know, because I want people to be honest with me and not afraid to say no, kind of thing. So I feel that that's helped me a lot for sure. But
even in the design business I do, like you create the plans, typically what the finished product varies a little bit from what's on the plan, and that comes from like bouncing off the ideas off of each other to get to that point, right? So yeah.
Makes sense. And how about realtors? Like, what's been your experience with them?
Yeah. So realtors. So realtors has been an interesting one. So obviously, like I told you, when I started, reached out to the landlord. So he introduced me to his realtor. But obviously, I wanted to do my own due diligence and get another realtor, just so it's not like I'm mooching off of the guy's people. Which down the line, I realized that like, hey, if someone is providing you a quality reference, there's nothing wrong with it. Just roll with it. But anyways, so came down, met my landlord's realtor first. Yeah. Great, amazing experience, 10 out of 10. Then I met the second guy, and the second guy basically showed up to the showing drunk.
No way.
Basically told me what I had in mind was not feasible. Took me to, I think he is, because at the time I had moved back to Toronto, so I guess he assumed I'd forgotten where the university is. He took me further away from campus and claiming that this is a university place.
Brutal.
And it was just terrible, right? So, but then the landlord's realtor that like I went with, like, been with him since 2019, no complaints. One of the things, similar to the contractor thing, one of the things that's important about realtors is personality matching as well, and they understanding your goals. Because at the end of the day, you're not just trying to buy a house, you're trying to get a deal. Like, people misconstrue this so much. The fact that the market is selling at a certain price doesn't mean you have to buy it at that price. If you're buying it at that price and you add value to it, it's not going anywhere. You're supposed to get deals, and having that mutual understanding with your realtor of your goals is important, because then a lot of realtors just want to make a sale, and as a result of that, they would cause you to buy garbage. And we saw a lot of that in, I guess, when we were coming out of the pandemic. Yeah,
especially.
Like around the university, things were going back then between $250, $300. Then now you're getting people to buy things at $450, $500. I mean, it's good it's good for guys like me who have existing properties. I just go and refinance, keep my equity, but you're redlining pretty much, right? Yeah. So you want to make sure that you and your realtor have a common understanding of your goals, to the extent that even when you're breaking the barrier of your price point, they're able to be like, hey, are you really sure you want to, overpay for this? Like, what's your plan? Yeah. Kind of thing.
Keeps you accountable.
Exactly.
Usually.
So that's pretty important, yeah.
Yeah, I think getting a deal is so important. Like, one of the things, the general patterns that I've learned following a lot of investors is you make money when you buy, not when you sell. Yeah. So like, you have to be buying below market, selling at market, and not buying at market, trying to exceed what it's going to be. So yeah, I mean, finding a good deal is very important. So talking about deals, obviously we're saying it's critical to find one, right? Yeah. How do you go about finding deals? Is it realtors? Are you looking off market? How do you get that?
Yeah, so pretty much for the majority of my portfolio that I got has been off the MLS. Okay. One of the key things that, and I think it's a problem that we have now, is patience. People are not patient, and I'm unusually very patient when it comes to this. So pretty much, for 6 properties I've gone through, all have been under $250,000. Wow. 250 and under. Let me put that, because some of them are at 250. And every time before I was like, oh, I got lucky, but then like after like 4 or whatever, I'm like, okay, you know what? It's the patience factor, because every time I would mention the price, they'll be like, oh, you probably got it in 2018 or 2019, but then I got it a couple of months ago. So like my last project, I got it near the university, college in Partington, got it for $230,000. Wow. And I got it in December. And it was just patience. Like, it's like, pretty much it's like, property comes up, there are certain factors that go into it that could kind of lead to that type of sale. Maybe the seller is pressed to sell. Maybe it's an estate sale. Kids don't want to deal with the house; they just want it gone. So many different factors, right? So it's all about assessing the property, like having your target number, and then putting in an offer that feels comfortable to you, not what feels comfortable to the seller. I'm not saying like maybe go to, I don't know, Lakeshore and it's $1 million property and put 250. I mean, it has to make sense. But then like pretty much it's coming back to that realtor component where it's like you have a goal you're working towards and you're putting in an offer that works for you and not just what works for the general public, right? Because at the end of the day, if it doesn't work for you, you're going to go broke. So,
yeah, exactly. Yeah, I mean, it comes back honestly to the original theme you were saying, which is about focus and knowing what you want. And if you define that deal and your realtor or your deal finder, whoever that might be, knows you're serious and you're patient enough, disciplined enough to wait for the right one to come across, that sounds like that's your strategy.
Yeah, so pretty much, and also there's an element of, there's also this component of you have to do the work yourself. So like we all think, okay, yeah, the realtor's gonna magically come up with something. We're all seeing the information at the same time. So basically, hop on the MLS, or be it on realtor.ca, or if you're in your realtor's portal, scrub it. And then, because what I do is I check it out, see something interesting. I'm like, hey, when our offers for this, look at it, do some assessment. What am I gonna do with this? Hey, I want to put in an offer for this on the offer date or before or whatever, and throw it in, and it works. Out of all the ones that I've bought, only one came off market, and it was very random. But but
it fit the bill.
It fit the bill and went on. So you can get it from both places, but it's all about being confident in what you believe the number works for you.
It makes sense.
Yeah.
So to clarify, you said you got all of your deals except one on MLS.
Exactly.
Got it. Nice. Yeah. Good. And those are really good numbers. Like I bet like the audience in Windsor for sure thinks 250 is unattainable anywhere.
Yeah. And even with,
I guess consistently it is, guys, if you're disciplined.
So pretty much with that number, it's like that's a number that I use. It's a very like harsh number that I'm using, but then it's like I kind of feel like, okay, if you're anywhere between 250, 300, you're getting a property, fine, yeah. But then like if you can hit 250, sure. But then like for some reason, consistently I've been able to do it. My days may be numbered with that number, given how things are progressing, but you should always aim for a deal.
Okay, so we've talked a lot about the cost side of things, like what's your target on that side. How about on the income side? Like how do you assess if a deal is right for you?
Yeah, so pretty much, I guess they call it back of the envelope calcs. So pretty much when I'm going in, I have this 250 number. I know roughly what the mortgage and the associated like costs, like utilities, taxes, maintenance, taxes, those kind of stuff are. So what the way the student rental model works is pretty much each individual is paying an amount, and that amount is normally higher than what a single family home would typically rent for around the university. So pretty much what I do is when I look at a house, maybe it's a 3-bedroom, 2-bedroom, I see if there's a way I can remodel the home or create an extension to kind of accommodate anywhere between 4 to 5 bedrooms comfortably with a living space and a kitchen. And I purposely say living space because there are a lot of homes that take away the living space and make it a bedroom.
Really?
The reason why I don't do that is I find that it's important for the people living together to have a common space to get to know each other. If we all come to the home and we don't interact, it's going to be a shit show. And PG, yeah. But then like that, like I'm pretty big on social community.
Nice.
And as a result, like the people have different strategies on how they rent their rentals out. I do it by a group. I don't do it by the room. Granted, I could make more money by the room, but I don't like that concept because one, it's a lot of management on my side. but then two, it's like, if I don't know you, you don't know me, and I leave dishes in the sink for 3 days.
Yeah. Recipe for conflict.
Exactly. And maybe you're introverted. You're introverted.
Won't say anything.
You won't say anything,
yeah.
and it's just gonna keep piling. Whereas I know you, you know me.
Yeah.
We make fun of each other, and you're like, "Yo, man, like, what's going on? Like,
Do the dishes.
Do the dishes." And it's like, I don't take offense to it because you're a friend, right? So I take more of the group approach.
Yeah.
You'll make less than what maybe the by room folks make. But then it's so much It's peaceful. It's much more peaceful, and it's self-managing where they deal with their house politics. They don't message you about internal squabbles that they have, and then if someone's leaving the group, they self-replace. As opposed to if you're renting by the room, you got to look for that one person, and that one person has to get along with all the other people in there.
Yeah, coming late to the party.
It's just, so that's kind of been the approach I've taken. On average, right now, like when we were in school, the rental rates were kind of around like $400 to about $450 per room. Right now, it's gone as high as between like $600. I've seen some even at between $600 to $800. So let's take 600 for example, multiply that by 5 rooms. That's that's about 3,000. Yeah, so you're looking at about anywhere between 3,000 to 3,500 per month for that, and it covers most of the bases at least for your property.
Gotcha. I definitely feel what you're saying about living spaces, because ironically that's how we met, was in your student rental and the living spaase. So that's really cool.
Yeah, it's super important. But I have my very first place. Anytime someone walks in, like a fellow investor or whatever, they're like, "Hey, won't you make this a bedroom?" I'm like, no. God,
come on.
That's the reason for it.
And it goes back to your vision, right? You said, I'm not trying to be a slumlord. Like, I want places I would live in.
Exactly.
So, very nice.
Yeah.
And then I guess when you go to fill with so it's a group kind of like contract kind of thing.
Yeah, so it's a group lease. So we call the group as a single corporative household. So it's like basically they're collectively taking responsibility of the lease conditions and terms and conditions of the lease. So it's lumped into one. So they all sign a single lease to take that on.
So with students, like I imagine coming in, especially first year, might be difficult. Like, how do you advertise this, or how do you find tenants?
So pretty much. So for that, typically, at least specific to Windsor. So first years normally live on campus, and then in their second years when they come off campus.
Yeah, and they know the group they probably want to live with.
Exactly. So pretty much back in the day, the most popular places to advertise was like Kijiji and stuff. Now it's all Facebook Marketplace.
Wow.
Like, you'd be surprised. You put something up, you get like tons of messages in it. So now you have to get into the filtering process of that. Screening and stuff.
And you do all that yourself too?
Yeah. So pretty much I have a system that I use, and I use it for also when I'm doing maybe like a single family rental or something, where it's I have a Google form that has all the questions I need to ask you. So when I get message, hey, is this available or whatever, I have a standard message where it's like, hi, thanks, we're looking for this. The lease is starting on this date. If interested, fill the form below.
Yeah, it's like a qualifier almost.
Exactly. And if someone complains about filling the form,
already bad sign.
Out. Yeah. No, not even. Because it's a lot of work to go back and forth.
Yeah.
Chatting and remembering the conversation.
100%.
Whereas with this, they fill the form, it goes into the spreadsheet. You can just look, yes, no, maybe so, and then move on. Yeah.
Good.
And then the next stage is basically after filtering through, meeting them at the property. Like again, I said, personality matching. Yeah. I'm pretty big on that. So someone may be good on the spreadsheet, but not good in person, right?
True.
Or they just give you, like, there's just a vibe. And I've had a situation where someone was amazing and I met them in person and something just wasn't right. And I was right about it. As soon as I told them that, I'm going with a different person, nasty messages.
Really?
Nasty messages. And I'm just like, hey, like you knew other people were looking at it at the same time.
Yeah, it's part of the process.
Yeah, but yeah, having a robust or like some form of process of screening is important. Yeah,
Systemized.
Yeah.
Nice. From what I know about your story, creative financing has always been one of your strengths, and that definitely is a big barrier for a lot of Canadians and Windsorites right now. Is trying to get enough cash to do their first deal, kind of thing. So, can you tell us about your first deal, or maybe some of your creative financing situations that you've accomplished and how you went about doing that?
Yeah, so for creative financing, it was one of the things that I fell into out of necessity. So first property, first mistake. So anytime somebody is getting a pre-approval, please get it on paper. So pretty much what happened was when I decided I'm going to go forward with this, went to the bank, told them this is what I'm going to do. Guy said, you know what, we can get you a mortgage for $250 any day, no problem. I'm like, okay, fine, I'm going shopping. I think he thought I was kidding, because I don't know why he thought I was kidding. So I come back probably like a week later. I'm like, hey, I have this deal under contract, and I could hear the panic in his voice.
Wow.
He comes back to me and
your first time.
Yeah. And he's like, I think a few days later he comes back. He's like, yeah, so we can only approve you for $150,000. So now I have to come up with the remaining $100K. And I'm like,
in how many days?
Yeah, so it was a conditional period for 7 days. He told me 2 days in, so I had like
5 days left.
5 days to figure it out. And mind you, this is my first time
ever
buying a house. So I'm panicking. I'm like, am I gonna get sued? I'm like, what's gonna happen here, right? And obviously at that time just started working pretty much, like only a year into it, didn't have a lot of cash. So I'm like, okay, what are the options outside the bank and stuff like that? So people are talking about B lenders. That didn't go anywhere. And then and again, this is the part that kind of gets into doing your own personal research on stuff. So looking into things on YouTube. I heard this common term, private mortgages. I'm like, what is this?
Yeah.
So looked into it, asked, and it was super expensive. Like they were asking for more down and all that kind of stuff. So ultimately it came down to me. So when I got the deal, I did tell my landlord that I had the deal. And then when I realized that I was coming up short, I hit him up and I was like, I'm going to lose the deal.
Yeah, this is my situation.
Yeah, I'm going to lose the deal. And he's like, send me the documents that you sent to the mortgage guys to work on. Sent it to him. A couple hours later, he sends me like a private mortgage agreement, like basically a summary. Him. He sends it to. So I look at it and I'm like, oh, this is actually pretty good, because pretty much the other private mortgage stuff we're asking for like 20% down, 3% lender fee, like basically amounts of money I didn't have to start with. Whereas this one was pretty reasonable, and I was like, oh yeah, I'll take it. And then it hit me, I'm like, wait, whose deal is that? Who's the backer? And he's like, oh, I'm your lender. I'm like, oh wow. I didn't know that. And that was like my first exposure to it. And it kind of set the tone for me getting into the space. So pretty much he's kind of like the angel behind making this possible. So through that, then it's like, okay, I started to delve deeper into, okay, how you get this money, because mind you, private mortgages are higher interest rate.
Yeah.
So it's not a long-term play. You have to have an exit. So how do you get out of it? And that's where the refinance component came into it, and I began to have a better understanding of it, and hence started incorporating it into my strategy.
Yeah, I mean, that's a great story, right? Because it shows that even dealing with adversity, I always say necessity drives innovation, and you had to make something happen in 5 days, and you did, and you were successful. Also, like the underlying, I think, reason that probably happened is because you had already kind of established a relationship with your landlord. You know, you reached out when you were interested in it. You know, got his kind of confirmation. He obviously trusted you and knew about you as a tenant. So it says a lot about your character. And then, you know, if you ask people, they're usually willing to help.
Yeah, like you said, and that experience kind of taught me one thing, because culturally, how I was trained was that when you're doing something, don't tell anybody about it. But through that experience, it kind of exposed me that, like, hey, if you're doing something, let the people in the space know about it. Like, it doesn't hurt, because you don't know where that helping hand or that referral or anything would come from, because that's how you take your steps forward through a path that maybe you have no idea about.
Yeah, that makes perfect sense. I mean, you know, if you're doing something, tell people about it. You never know who has experience with it. People you know sometimes may, you know, be able to help you with that. And one of the things I've noticed about Afrani Properties is you are like religiously consistent on social media. So every week there's a really cool update post coming. I'm always following along, and I know a lot of people do as well. So, you know, that seems to be like over the last 6 or 12 months, you've kind of really gotten into it very consistently, at least just being a fan of the page for a while. So what role has like social media played for you, and what benefits has that brought?
Yeah, so social media has really helped a lot. Like I mentioned before, naturally it's like I just want to do my thing, call it a day, wrap it up. But as I started, one of the reasons why I started the page was, so one was personal to me, was more representation, because I didn't see a lot of people like myself in the
100%.
space that were doing it. And I would go to meetups, and I'd be the only person that looks like myself there. So I was one of it. So it was kind of like, okay, I guess let me try it and see. So that was one aspect of it. And then the other aspect of it too was also being able to connect with other people. There have been different, especially during the pandemic, where it's like we didn't get as much touch points with people. It was super helpful in connecting people. It'll be surprising to see like how many people who like you've probably never spoken to, and then your project's done. It's like, yo, I've been following your stuff. It was so cool. I'm doing something here. I was like, oh,
so
wow.
that
Like,
happens to you.
yeah, it does.
Yeah, that's cool.
Yeah, and then like even it's like, hey, like I'll be in town for XYZ. Like, can we meet up and chat?
People will reach out on LinkedIn.
On LinkedIn, on Instagram. It's like it's pretty like it's. I never thought, like when I did it, I never thought it was going to go in that direction. I was just like, hey, let me just put some information out there and then see, like at least show what's going on. But it's really helped in connecting with other investors as well, and also like it also shows as a proof of concept. So like if you're raising funds or whatever, people know that, okay, yeah, like you actually do
ability.
This. Yeah,
and here's the proof.
Exactly.
100%. Yeah, I've noticed you're really strong with like case studies, even in the GH business. And like I hear the story a lot, which is like not too many people do social media or like even just talk about what they're doing. But those who do get all sorts of benefits from it. So that is a big differentiator I've seen between you and other investors. And you know, it's really cool to hear the payback on that.
Yeah.
You know, related to that, what makes someone successful on social media? Like, what are the aspects that like, you know, everybody might want to do it, but what are the steps you should take?
Yeah. So pretty much like just naturally delivering your information, I find helps, like, because people connect with that more than it's like just something that's like staged, right? So
100%.
Just being able to deliver that, obviously, like I'd say my page is it's average, but like it gets the job done. But then for me, like one of the things that I tried to kind of get going was consistency in posts. And I knew, because normally when people start, they want to do like 4 times a week, 3 times a week. And for me, it's a lot. It's a lot. And coming back to my very first point about the whole investing thing, like what works for you. So I'm like, you know what? Once a week works for me. And if I miss it, I miss it. But I know that at least every week I can post something, especially if I have a project ongoing. So that's kind of the angle I went with, and it helped me stay consistent. Obviously, there's some weeks that I miss out, but at least I know that this is the schedule, and this is what I'm following, rather than just, okay, I have like 10,000 posts right now, bang, gone. So yeah. So that's kind of been the rhythm of how. So one, consistency, and two is
almost relatability.
Yeah, relatability.
Yeah. So social media has helped a lot, which is great to hear. How about on the networking side? What have you found are like the top 1 or 2 activities that have had like the highest return on like getting to know people, or little steps people can take to kind of build their network?
Yeah, so I think like the social media and the networking go hand in hand. When I started initially, I was a bit hesitant to go to the networking events because I was like, like I only have one property. What am I going to say out there? But like you'd be surprised. Like it's like these networking events just have people with the same common interest as you, and it's just a natural flow of conversation. So with networking, it's putting yourself out there, but then everyone else is doing the same thing. Everyone is a bit like, nervous, but it's like once you tap into a conversation, you even forget that, I just met this guy, right? Yeah. So I'd advise that like networking is pretty good. It's been a nice way to meet people, and like even with like the social media thing, I could go to a networking event and people's like, "Yo, I saw your post." So I'm like, "Oh wow!" Like so cool. And then like sometimes you even feel bad because maybe you're not following the person back. I'm like, "Oh my bad, bro," or whatever, and then follow them back. So it's like it's a way to keep in touch with trends, what people are doing,
for sure,
and keeps you up to date with what's going on.
Yeah, you can ask for a group of more relevant knowledge to kind of tap into, and I completely agree, because I know that when I was first looking into cross-border real estate investment, one of the best decisions we made was to go out to a conference, like the state real estate investor conference, for the hosted in the area in which we were looking to invest, at least kind of around that area. And like through that event, just through conversations, we learned we heard so many terms we didn't even know what they meant. Yeah. And at least that prompts you to go through the education, talk to some people who know way more than you, and acceleration in terms of growth, never had more than like a 2-day span, over this conference. So completely agree there. What do you actually go to in Windsor for events?
Groups? Yeah, so in Windsor, I go to the what's it called?
And then you're talking Lens City, right?
So Lens City is one. Lens City has like the online component of that. So that's one that, I'll take it from the top. So pretty much when I was in Toronto, I used to go to the Rise Network investors meetup, and it's like investors from all over, like Windsor, Sudbury, you name it, you'll find someone there. Hamilton, anywhere.
Okay, and that's Rise Network.
Rise Network, yes. So that's where I got it from. And then when I moved down to Windsor, I kind of wanted to keep interacting, or at least get to know the local people. And I think it's called Windsor Realty something. I forget the name.
Do you want to look it up? Or?
Yeah, I could look it up. Rambling. So I'll start from the top. So when I was in Toronto, I used to go to the Rise Network real estate event in Toronto, and there was another one in Hamilton too that I was going to, where it's like it's investors from all over. So even though it's like in that city, it doesn't mean that probably maybe only 2 investors invest in the city that come to that event. So they're from Windsor, Hamilton, as far as Peterborough or wherever. So that's the one I was going to. Then when I moved to Windsor, I was looking for something similar I could attend to, and I was going to the Windsor Social REI event. So it's it's hosted by a local realty group over here that is investor focused. Okay. So I think it's held once a month. They bring speakers in, and then it's a way to kind of get the local people to get to know each other and stuff like that.
Got it. How often are you going there?
So it happens once a month. So if it's not aligned with, if it's not conflicting with anything, then I'll attend. But then if it is, But so far, I've been to a couple. They do property tours sometimes. of investors' properties, which was pretty cool.
Yeah,
That was
that's great.
actually my first interaction with them, and yeah,
Wow.
it's been good.
Yeah, it's funny you say that. Like that was one of the main events as well. So I mentioned the real estate conference in the area we were looking for cross border. We also went to, I focus on short-term rentals like Airbnbs, and we also went to a short-term rental walkthrough in one of the communities that we were looking for. So there's surprisingly niche events.
Yeah.
Like the city, the town that we went into is not a particularly big town, nor is it really like known as a vacation destination. This was Muskegon, Michigan, that we were interested in at the time. So, these things are out there if you look for it.
Yeah, for sure.
Switching gears a little bit here, liability is a concern for a lot of people,
Yeah.
especially pretty strong tenant law in Ontario, that kind of stuff. What is generally your strategy to protect yourself?
So generally, liability is one of the things that comes up. Pretty much with that, like, it depends on how you look at it. With everything, there's a risk, right? So best you can do is mitigation. So some of the mitigating factors, insurance is one of them. So I know some people who probably have insurance that doesn't match the use of the house. That's a liability issue.
Yeah.
Something goes wrong, you're in trouble. The other component is and the popular thing, which I have myself, but I didn't do it mainly for liability, but it's an added benefit, is having a corporation set up. So having your properties set up in a corporation kind of creates that air gap between your personally owned stuff or items or assets,
cash whatever,
from anything that happens to your rental properties. Let's say, I don't know, for some reason someone decides to slip and fall in front of the house, they're suing you. It's contained in there. But the one thing to note is that if you have a corporation with other properties in there, they are exposed to that liability. So it's kind of like you assess your liability. How should I say it? You assess your how exposed you want to be or not, and then you play it. Because then there's some people who have a corporation per property, which is fine, but it's a lot of tax filing. Like there's a lot of added cost that comes to it. So you have to play the game and kind of see where you want to fall. The question is, how often do we hear of the lawsuits for that? Like, are you overprotecting and paying more for it, or are you genuinely in a situation where, I need to kind of take that step?
Makes sense. And this is like Ontario Corporation, or
Ontario Corporation.
Got it. And that's what houses your 4 properties that you own now.
Yeah. So the corporation holds the properties, but the main reason why I set up the corporation for that was for tax purposes, because I'm still working, and what happens when you have rental income and it's in your personal name, it comes on top of your personal income, and therefore your tax bracket goes higher up.
Yeah.
Whereas in the corporation, it's separate. You can kind of like funnel the money down, like take it as a dividend if you want, or just leave it in. Yeah. So you take it at the best opportune time, as opposed to just taking it.
You need to at the end of the year.
Exactly. Because like, I don't really need that money at that point in time if I'm already getting an income. So playing the game.
Yeah, keep it in until the time's right.
Yeah.
Makes sense.
Yeah, so for me, that was mainly my motivation.
Got it. So you control timing.
Yeah.
I'm going to switch gears a little bit to GH Building Designers. So where does the name come from?
So honestly, this name, so how it came about was originally when I set up the corp for the property company, I had
That's Afrani Properties.
Afrani Properties. I set up a property management company for it, like a corporation for it. So for tax management, and I call that.
So one for the assets, one for the management.
Yeah. So then basically, so I can kind of regulate the tax deductions for it, because in the when you have so there are 2 types of corporations. One is a passive, and one is an active. Now, if you have a passive, your tax rate is higher. I think it's almost about 50 or something like that, 50%. But if you have an active corporation, it's around like 13% or something like that. So pretty much how you kind of work the game is if you have a management property, then you can kind of funnel some of the funds through it and balance the books that way.
Got it.
So I had that corporation, and then, but I didn't end up using it as much because of how I was managing the back end of my renovations and stuff like that.
Yep.
So then I got my engineering license.
Got it.
So
the
when I
magical
got
stamp.
the magical stamp, the elusive stamp. So when I got it, and I got my certification of authorization from the PEO, which is basically, for those who don't know, C of A, you need that to be able to provide public services. So someone could be licensed, but doesn't mean they can offer the service, right? So I was like, hey, I have this corp that's not doing anything, let me hop onto it. So originally, the design business was called GH Property Management. Into bracket, design service. And then as business started to pick up, to not construe the name, I switched it to GH Building Designers.
Got it. Makes sense.
Cool. To kind of create that clarity that it's a engineering design firm.
Yeah, and for background information for those who don't know, so Kwame's a civil engineer.
Yeah, civil engineer.
And to be a professional engineer in Ontario, you need a certain amount of experience plus to pass an ethics test, and after that point, you can formally approve designs. Yeah. And can you tell us a little more about what GH Property Designers does?
Yeah, so GH Building Designers pretty much is so it's an Ontario firm that we do permit designs. So pretty much if you're doing a new build, you're doing a renovation, you're trying to put an ADU in, we prepare the drawing package for submission to the city. We do the coordination with the city, get you the permit, you're good to go pretty much. And our main specialty is in additional dwelling units, so adding basement units to homes or doing garden suites in the backyard and stuff like that. So kind of tapping into the Bill 23, which was passed by the provincial government to allow densification of homes pretty much, yeah.
Got it. Is this something that grew organically from Afrani Properties, meaning like you needed those skills anyways?
Yeah, so how it even came to it was when I was doing Afrani Properties, everyone knew that I was a civil engineer in construction and stuff like that. So people would ask, hey, I'm trying to remove this wall. What do you think? It's like, off the record, you could do X, Y, Z.
Yes.
And these questions kept becoming way too often. And I'm like, you know what?
I should probably charge for this.
Yeah, I should probably run a service for it. So once I got my license, I looked into what do I need to be able to offer this service publicly in a legal fashion. And
nice.
Got the necessary paperwork done and all that, and started running with it. So pretty much the clientele that I've got to date has been through as a result of Afrani Properties. So word of mouth, pretty much, yeah.
Very nice. And stepping back to Afrani Properties, Ontario Corporation, was that something you set up before getting the house under contract or after?
So my first property I bought in my personal name.
Yes.
Because I was like, we're trying this out, let's see how it goes. Then when I put in the offer for my second and third, because for some reason they came at the same time, the offer I put in was in my name.
Yeah.
And then I was like, hey, you know what? I think I'm doing this for real. Let's set up a corporation. So I set up the corporation and then swapped the name on the APS, the Agreement Purchase and Sale, and just went with it. So I started putting properties in my corporation from my second property going. Yeah.
Got it. Yeah, and I bring this up because I know it can seem really daunting when you have like multiple corporations and several properties. It's like, well, that seems like a lot to get to, right? But generally speaking, it starts with buying one personally, and then handling liability as it comes, right?
Exactly. So pretty much everyone who starts, they kind of ask, hey, should I set up a corporation and buy? I'm like, well, I mean, you could, but then it's like, I feel like it makes more sense to buy your first one personally to see if you actually enjoy what you're going to get into. and then go from there. But then some people, like, again, they can start the corporation right away if they're 100% sure. Yeah.
Like you said earlier, it depends on you.
Exactly.
What's really interesting about GH is it's a service business, like, pretty independent from investments, really. So I wanted to ask you, like, usually the marketing or even like the value proposition you bring for a service company, generally very different than an investment holding type company. So how do you go about getting clients for the service business, and what kind of revenue are you generating from that versus, how much time do you put into it?
So pretty much with the service business, so going into it, so one thing when I was running Afrani Properties was it's considered passive in a sense where it's like there isn't as much effort you need to apply. The effort for you to run the business is finding the deals, working the deals, going to the contractor. So it's like there's not really an advertising component to it. So switching over to the service business of GH Building Designers, that was a wake-up call to me, because I'm like, oh wow, like I actually have to push myself out there. But luckily with the previous exposure I had through Afrani Properties, it kind of set a base for me to kind of tap into the public to kind of get some leads from it. So pretty much main leads have been through social media and then word of mouth, and it's
in that order.
So I'd say in that order, because to start it was pretty much went to my social media page. Hey, I'm starting a design business. If you're interested.
This was on Afrani Properties.
On Afrani Properties, yeah. Wow. That's what was going on. Here's the social media page for the design business, because I wanted to create a separation between the two.
Makes sense.
Some people reached out, did some work for them. They told other people. Those people told other people, and then that's how the company's been rolling. So since we started, we've done probably close to maybe 150 projects across, like, from Windsor all the way to Ottawa, pretty much. Since 2021.
Wow.
Yeah. So pretty much with that, the nice thing about it is because it's design, it could be done remotely as well. So some projects I've not seen before. Other projects I've seen way too many times. So it gives you that variability of it. Now, the other interesting wake-up call in entering into a service business is, for investing, for going to work, we realize that on a monthly basis, for sure this is the amount of money you're going to get. For the service business, it's like it just goes up and down.
Definitely.
You can go 3 months, no job, and then month 4, it's like a ton of cash, or it's like it goes consistently and it comes down. So getting used to that ebbs and flows and not panicking has been something that I've had to train myself to get used to, because the fact that maybe you're not getting business in a certain period of time doesn't mean your business is not doing well. It's just the sequence or the flow of the business at the time, right? Because like people rarely do construction in winter, so seasonality pretty much. So you have to get the trend of that and then tailor your organizations and expectations to fit it. Yeah.
Got it. Yeah, that's really cool. Yeah, that makes a lot of sense. I mean, totally different world. One of the things I noticed you do really well on the GH website is case studies, like the projects you've done. They're all there. It definitely helps you build and have credibility. So like if someone visiting that website, it's really professional. You definitely feel the experience that you bring from that. So that's really good. Now, on the topic of like launching a website, that in itself can be daunting for a lot of people. Like, how did you go about that? And, what platform are you using for that?
Yeah. So for the website, so pretty much with that, so I've built websites in the past before, but for the website itself, so primarily what I was kind of using as my portfolio was off of the LinkedIn and the Instagram pages. So once I had built up some projects to showcase, I hired someone to set it up for me, because then I want, even though I could do it myself,
Yeah.
I wanted someone to kind of go through the proper channels, get it set up,
Makes sense.
have it aligned as needed, because like as the even coming from like the Afrani Properties business and stuff like that, as you continue to grow and do other stuff, you realize that, yeah, maybe some things you can do yourself, but like it's
Do you
faster.
need to do it? Yeah, exactly.
It's faster with other people, and it takes things off your plate. So
Focus on what your strengths are. Right?
exactly, pretty much. So for that, I hired someone to do it, gave him the concept of what I was looking for.
Local or like remote Upwork or something like that?
So it was a remote person. So actually, it was someone I met in the real estate network.
Oh, wow.
Yeah,
No way.
I bumped into him at a meetup
Yeah.
in Toronto, the Rise meetup.
Got it.
And pretty much
His focus was...
yeah, he had actually done a website for one of my friends that I knew, and he was asking me questions about investing, and then it came up. I'm like, hey, like, I might be looking to do a website sometime. At that time, I didn't really have it in mind, but
Yeah.
it was at the back of my mind.
For sure.
And I just floated it to him, and it was done.
Yeah, that's good.
It was done. So again, power of networking, right? So that was good, and it helped too, because then he understood the business
Yep.
from the investor point. So he set it up in a way where it's more where investors would understand what I'm trying to convey, pretty much. Yeah.
Yeah, 100%. And I think a big lesson there too is like focus on what you're good at, outsource what you're not at, and that's kind of the quickest way to grow. Okay, so switching gears back to investing, I wanted to get your personal thoughts on cross-border investing, that is Canadians investing in the US. I know you've mentioned it's kind of gaining some momentum or some attention at least, especially in Windsor being kind of a cross-border town. Probably a lot of that has to do with affordability, but curious to get your own thoughts on that and what you're seeing right now.
Yeah, no, so like cross-border investing has really picked up in the last couple of years, like pretty much, especially during it started. I found that it started pretty much during the pandemic. A lot of people were transitioning more into the U.S., and then now that we're kind of out of the pandemic, it's even more. And reason coming down to some people are unsettled with how some of the policies are being set up here. Others are also interest rate affordability has been a factor. And another thing too is some of these cities, like you compare the price of a home to what you can in the U.S. to what you can get in Canada, like it's a huge difference. And it's like more home for more money. Like
Exactly.
so naturally, people who are in a comfortable position and are open to kind of go in that direction are taking the shot. Some people are selling their portfolio and moving across. So
All of it.
Yeah.
Wow. Yeah, and you said a second ago, more home, more money, but you mean more home, less money.
Oh yeah, sorry. More home, less money.
Yeah, I mean, preaching to the choir for sure, right? So like, all I had really done in Canada was like one personal home flip, more or less, turning an old house, renovating, making it nicer. And then I chose to start my actual investment career in the U.S. for all the reasons you're mentioning. So, in my opinion, pricing there, you can kind of cherry pick communities as long as you're comfortable with long distance investing. I think that's a big barrier for most. Then you can pick whatever community makes the most sense for whatever strategy you're going to go after. Certainly more affordable even after Canadian exchange and all that kind of thing. And then obviously they're a lot more investor friendly from a policy perspective in Michigan. So those are all the things that attracted me to go through the due diligence of doing it.
Yeah.
Now I think with long distance investing, people kind of inflate how difficult it is more because they can't see it or they can't go do what they need to immediately to it itself. But I think that most people overinflate their own value in the process, and that's with all due respect to everyone, right? But not everyone's a civil engineer who can stamp off designs kind of thing and knows what they're looking for. Like for me, if I'm going to view a house, I'm just walking through it and saying, oh yeah, it looks pretty good. Like there are professional inspectors everywhere, and I would trust their opinion in an inspection a lot more than than my own, right? So, if I'm doing a viewing in person down the street, to me that's no different than doing a viewing, across the state of Michigan or somewhere else in the United States, because I have the professionals on site making judgment calls, and I'm just making objective decisions on the investment.
Yeah.
So.
Yeah, no, and you've hit the nail right on the head, because I only got close to my properties a few months ago. I've been long distance investing since 2019, and everyone's like, "Oh, your property is so far away." But the reality of the situation is, if the pipe bursts in my house, I'm not going to fix it. I don't know how to fix it.
Exactly.
I'm not that guy, pretty much. So what I invest my time in is connecting with trades who can help me out. Trades 100%. I can call out to go check things out. Even now, when something happens, even though I'm near the property, I don't go to it. I'm like, "Hey, can you go check it out?" And they go check it out.
Yeah.
So
let the experts handle it, right?
Yeah. So it's pretty much your time. When you're long distance investing and even being close to your property investing, your time as an investor should be invested in creating that Rolodex of trades that have your back in times of need.
100%. So have you personally considered investing in the U.S.?
I've considered it. Yeah, it's something that's crossed my mind a couple of times. But every time it crosses my mind, then a good deal in Canada pops up. So it's 2 steps forward, 10 steps back kind of thing.
Gotcha.
But it's something that I've considered, especially now that I've kind of moved to Windsor too. It's basically glaring me in the face.
Yeah, exactly.
And I'm just okay, we'll see. But it's something that's it's on the docket for sure at some point.
I can definitely help with that. So what are Canadian investors looking for in the US that they can't find in Windsor or Canada right now?
Yeah, so one of the main things that investors at least the ones I know of, are looking for is they're looking for landlord-friendly states, because we have a problem here where it's even if the landlord's in the right, you're stuck with it. The landlord-tenant board takes way too long to resolve issues, and during that period, you're not getting rent, and you can't do anything about it. So landlord-friendly law states are kind of a big ticket item for what people are looking at. The other thing is I know in a place like Florida, build costs for some reason is considerably cheaper compared to here. So people are pivoting into new developments as well because of build costs or construction costs relative to what they would do on the Canadian side. So those are some of the things that people are looking for, and then just policies, and the U.S. kind of leads the trend of where the interest rate kind of goes in certain situations. So it's kind of okay, hop on board and kind of be ahead of the trend rather than trailing behind. Yeah.
What are the barriers currently preventing Canadians, or at least more investors, from investing in the U.S.?
So I think one of the things is knowledge on the top topic is, how do you get a mortgage in the U.S.? What does that look like? So there aren't many mortgage agents that are knowledgeable on this topic, so it's a bit limited. Now we kind of see it a little bit more, but then kind of making it more public knowledge. So mortgage is just one thing. What are the tax implications if being there? I guess when it comes to do you need a visa in order to be an investor in the States, or is there a workaround? Those kind of basic but important points are kind of the barriers that investors are looking at. Aside that, if those are answered, it's a free for all pretty much. But those are kind of the three main things. So how are we going to buy? Can I legally do this? And if I can, what are the steps for it? And tax-wise, what are the implications?
Yeah, 100%. That's exactly why I worked to start Cross-Border Real Estate Solutions, is to help with that education piece, because there are a lot of risks, or at least perceived risks, about liability, taxes, legalities, all of these things. And it's not a trivial process to navigate, but once you know what structure you need, and how do I go about getting lending, and How do I build a team in a certain area? It becomes very much a free-for-all, as you said, right? So that's exactly why we're working at Cross-Border Real Estate Solutions to educate others on how to do exactly those things, and that's the services we provide. Okay, so coming back to Windsor, what do you think are the biggest opportunities over the next 1 to 2 years?
Yeah, so for Windsor right now, like from the time that I first came here, 2013 to date, like you can see there's a lot of development coming. Like obviously we have the bridge, which is nearing its completion, which is the goal of that is to increase the flow of trade across. So you're going to have more suppliers or manufacturers in the area. The new battery plant, which everyone's been raving about, is going to bring a lot of people to town. So and then obviously if they're building a new hospital, it means they're going to expect an increase in population. So there are various angles to kind of approach it, like in terms of opportunity. So all these new professionals that are coming in, or even the workers that are coming in, they're going to need a place to stay. So that's one angle people can kind of take as an opportunity to tap into. And then with development comes growth of the city. So the densification of homes are going to it's going to become an important piece.
Yeah, and that's kind of your niche in this pocket.
That's my niche in that pocket with the design business. So being able to provide those type of homes for people, because it's a small but big city, but like very soon we'll be bursting on the seams, so that needs to be catered to, right? So yeah, there are a number of opportunities that people can tap into, even with the university expanding and stuff. Like they already have a ton of buildings in the downtown core over there, so student rental. So there's so many opportunities that present itself. It's just tapping into the one that you can manage the best, right?
Yeah, makes sense, and basically driven from the demographics and like what's happening with the city.
And also, one more thing is there's a lot of land in Windsor that's like not developed or is on hold, and all these lands will start becoming accessible for development, because if you have the land to put homes on, you need to put people there, right? So,
yeah, exactly.
Yeah, and it's a very rare situation to have, because you don't have that same thing in the GTA or neighboring stuff. So if you're into land development, your time is coming soon as well. So
nice.
Yeah.
Good. And flip side of that coin is, what do you view as the biggest risks in Windsor for investors in the next 1 to 2 years or so?
So the biggest risk right now, and this is just my personal opinion, I feel like we are kind of repeating a bit of what happened in Detroit, where it's like we're betting a bit too heavy on one industry.
Okay.
And if we don't diversify, we run the risk of going downhill. So development is good, but then diversification is equally important.
Got it.
So
and you're talking auto specifically.
Auto specifically, because all the announcements, all the money being pumped in is auto. If for some reason EVs don't do what they've been tagged to do, we're in deep trouble, pretty much. So on the flip side, that's what it is. The hope is that it works out, but caution.
Yeah, makes sense. And one thing I wanted to get your opinion on was, like being an experienced investor, was kind of a hypothesis I have right now is that we might be in for a bit of a rude awakening in terms of house pricing. And the reason I say that is next year marks the 5th year from COVID, and when we had those radical kind of rate drops and the super inflation of like house pricing and stuff like that. So a lot of people took advantage of those mortgages at the time, like very, very low interest rate mortgages on houses that costed more than they typically do cost, something you kind of talked about a little bit earlier.
Yeah.
So that storm, happened then, and a typical mortgage structure in Canada is 5-year fixed, right? Where you have to renew the interest rate 5 years later. So, I'm kind of wondering what that will do to the house pricing in Windsor. What would your thoughts on that? Is that crazy? Is that What do you think, honestly?
Yeah, no, it's a valid thing to have in mind. Like, we even saw a bit of it for those who were on variable. Like,
Yes.
they were sweating, and there was a pocket of time where homes that were valued higher were being sold for under asking, right?
Yeah.
So now we're getting into the fixed component of things. So now, and this year, people are betting that there will be rate cuts in anticipation for that, but then, like, we're not cutting to 2%. Like,
yeah, so there's some increase coming.
So right now, it's definitely going to cause a shake in the system. Luckily for us in Windsor here, like, our price point is at such a point where it's like we're not too far off from the bottom, but we're off the bottom.
I know what you mean. Yeah.
But then, like, you take a property like maybe in the GTA or something, like it's $2 million. You were paying, let's say, under 2% interest rate from it. Now you're gonna pay like what, 5 or 6%?
Significant.
Like, yeah, I don't know. Maybe you're doing something else, but yeah. But like for Windsor, I feel like maybe there would be some effects, but I don't think it would be as drastic, just because relative to other cities in Ontario,
the magnitude's different.
The magnitude is different. So yeah, we'll have a few people who will be sweating a bit, but I don't think it would like crash the Windsor housing market.
Gotcha.
But then I can't say the same for other cities. Again, I don't have a crystal ball, but
of course,
but that's my thought on it.
Yeah.
So definitely something to keep an eye out for.
So next year might be a good time to buy in Toronto.
Yeah, I mean, hey, like if they're willing to go that low, might as well. But like it all comes down to like what your goal and your target is, and then playing to those strengths, right? So even though the price comes down, you have to make sure that, okay, does it fit your portfolio agenda?
100%.
Yeah.
And that's back to your first point: focus. And be disciplined.
Discipline, yeah.
So. Well, thanks, Kwame, for coming out. Thanks for dropping all this wisdom on us.
Yeah, thanks for having me on, Eric. Means a lot.
Yeah.
Definitely keep doing what you're doing, sharing the knowledge and service to the people. They're going to appreciate it. It's much needed.
Thank you. Yeah, I mean, I wanted to bring some Windsor-specific knowledge out there. This is going to be tough to top because you bring a lot of interesting perspective with both Afrani Properties as well as GH on the services side. So, yeah, really excited. Thank you for coming out.
Sounds good. You're the man to do it.